Gold remains in consolidation mode even as the US reaches a phase one trade deal with China. Now, there had been many out there who had been suggesting that we could have potentially seen a little bit of dollar weakness on the back of any phase one trade agreement between the world's two largest economies. We have to remember that over the course of the last 18 months, any escalation in the trade war between the two countries has typically been supportive for the US dollar, given its safe haven status and given the fact that ultimately this is the big trade deficit country and therefore the argument being that they would stand to lose less in the event of an escalating trade war than China and others may have. The result, though, that we're now seeing on the back of this agreement is the fact that the dollar is actually stable rather than declining. We have, of course, seen a lot of volatility in the currency itself, but it has remained broadly stable, having already seen some weakness over the course of the last month or so. Now, there could be a couple of reasons behind this. One is that the dollar always tends to seem to find some longer-term support and has done for quite some time. You can see in the charts that that has typically been the case. The other thing as well is that we're still awaiting the details of this phase one trade agreement. They have suggested that the deal itself does need scrubbing up, and we have to remember it was back in October that Donald Trump first announced this agreement, and then it became clear that the details still needed to be worked out, and we seem to be kind of in that situation again. And we're still waiting for the T's to be crossed, the I's to be dotted. And until we get that full agreement, until the deal itself is signed, the dollar may continue to hold out a little bit. What this means for gold, though, is that we are just continuing to remain in this consolidating pattern. Remember, we reached around a month and a half ago the lows around 1440, 1450. Since then, we've been in consolidation between the kind of 1450 and 1480 level. Importantly, the 1480 has been breached on a couple of occasions, but only briefly, and we continue to trade around that level now. While we are seeing a slightly rising pattern, though, given the decline that we actually saw prior to this still technically remains a relatively bearish setup unless we can propel ourselves and hold above that 1480 level. If we do see a little bit more downward pressure and we start to see that 1450 pressured again, then I think the bears would take that as a sign that the market has turned south again. But what is notable is that prior to the latest consolidation, gold has dragged its feet when it has been moving lower, showing that reluctance to see a broader decline. If we can see a hold above 1480, then that potentially suggests that we are seeing some near-term support and the bulls are coming back into favour. Above here, the obvious level is $1,500, the big round number, which technically does tend to hold some significance, but the real level above here, which is more significant, would be 1,520 should we approach that level. 1480 has been approached on a number of occasions, and the fact that we are seeing a series of slightly higher lows in gold may suggest that bullish pressures are building. But we did see this during the previous consolidation, and eventually it was the bears who won out, so there is potential that that could be the case again, and we just have to continue through this prolonged period of uncertainty. Like I say, it's all about getting that signature on the actual trade agreement itself. But we are now also going into a more quiet time of year. The Fed meeting last week passed by without any real distraction. The Fed holding as we expected them to, follow after cutting interest rates at 3 of the previous meetings and suggesting they're actually going to remain on hold throughout 2020. So that's going to be less of a focus as far as traders are concerned and as far as the US dollar and therefore gold is concerned. So the next couple of weeks could be a little bit quiet, which could potentially lend itself to further consolidation in gold. Going into next year, again, trade is going to remain a key topic, but as long as we get this phase one over the line, then attention may start to turn to the presidential election. Whether Trump wants to get into a fierce debate and a fierce trade conflict with China in an election year is doubtful. This may be something that he holds out for until after the election victory itself, assuming, of course, that is secured. But in the near term, this consolidation looks to continue. 1480, the key level to the upside, 1520 above here. But should we see a break below 1450, then that could potentially open up a little bit more interest back towards the $1,400 level.